Good morning, everyone, and welcome to the European crossover webinar. And we have seen a pretty decent sizable move in the dollar yen overnight. Indicates here, obviously, you see the BOJ disappointed, and indicates here dollar sank as much as 0.5% against the basket of major currencies on Friday, hurt by a resurgence of the yen after the BOJ opted for tweaks rather than outright expansion of its monthly asset purchase target. The idea is really as if they were going to make a move in January, so I guess maybe some people thought that they might try and do something in December, and obviously were disappointed. And we'll take a look at the charts on that. As we come into today's session, into New York trading, the only thing we have coming up here is going to be PMI, market PMI, and that's it. Other than a little bit later on at 11 a.m. Eastern time, we'll have Kansas City Fed manufacturing, but that'll be it. So it's going to be relatively quiet. The euro's been relatively quiet, and just as I was indicating yesterday, crude's been relatively quiet, although we're starting to see it pull back. Some is kind of moving to lows of the session now, but it's still been in a relatively quiet range. We're talking about a 40-cent, top to bottom range for quite a few hours, and it's moving towards the lower end of that range. But that's about it. I mean, as far as, and also the pound is really has really weakened. So let's just go on and move into the charts. And I guess we'll focus real quickly on the dollar yen. I haven't paid too much attention to it. Obviously, I wish I would have. I've been focusing mainly on just, trading the euro and crude oil. And just recently, as I told you, I started looking at the boom, which, wow, that thing is just wild. I mean, it just moves all over the place. So, other than the one trade I took, which actually wasn't a bad price at all, it's just that the market was just kept falling at that time. But I haven't paid that much attention to dollar yen, so unfortunately, it had a big move, and had a big move without me. Actually, now when you look at it, it looks like we had an absolute freaking huge move. Of you looking at 200 pips, and here's that area. We talked about 22.96. We were able to get above it, but if we look at this, and let's give ourselves a little bit more space on this. We've got this zone up here at 23.63. You can see they ran out of gas ahead of that zone. And as the story indicates, they disappointed with just only offering tweaks, and the market was hoping or expecting far more than that. And obviously, we went and took a pretty good, decent-sized tumble. And now what we've done is we've moved back towards the bottom of this zone channel, the 2130. Let's see if we can once again push this out. This zone channel, 2130 to 1892. So we've had one heck of a range. You know what? I wish I would have been paying attention to the dollar yen. I've already started to quiet down my trades now that we already had to move in the euro, and the euro's doing really a whole lot of nothing right now. So I had not been paying that much attention to dollar yen. And boy, did we have one heck of a move, and certainly missed an opportunity on that, but I just have not focused on this. At this point now, I mean, from a technical standpoint, if we could even get there, any moves against the 2214 bias pivot are going to be faded. And you can see here that the market quickly accelerated once we got past the bias pivot of 2214, and it actually, we'll adjust these a little bit, it actually found support at the 2182 level, just overshooting that a little bit, and we'll move these over here. But you can see on the rebound, that the market failed just ahead of that bias pivot, which is the 2214. You can see as the market just collapsed and went through here, garnered momentum as we got past the 2214. We found some support here at the 2182, and then the market tried to rally back up. But the market was more than happy from a technical standpoint to fade moves against the bias pivot of 2214, which is exactly what they did. And now we've turned around and pressed lower to take the market and gun these stops right here past this previous low, which is what we've done. And now the market has kind of rebounded, and now we're smack dab here in the middle. And the key ranges, once again, at this point are going to be the 2130, the top of this zone, to 2214. And look at this zone here. So you can see here, like I said, it's had, a fantastic range here on the dollar yen. And obviously, like I said, that 2130, really the top of the zone, has really worked as a little bit of a buffer. But if when you look at it overall, that's over 200 pips. So it was really quite a sell-off. I've already started to wind down action, and usually I don't do that, but I've already started to wind down action. Really, that was based on what we've seen happen now in the euro dollar, and we'll go into that, and also what's happening in crude, which crude has just turned around and just gone basically flatline. If you think about what the action that we saw from early last week all the way into Tuesday. And now the market has, and actually even to Wednesday, and now the market is basically just flatlined. But like I said, we had one heck of a move here in the dollar yen. Any moves, once again, the key level is going to be the bias pivot at 2214. You can see the significance of the 2214. That's why it was a bias pivot. The market comes to this level, and when it fails here, it turns around and accelerates to the downside. And the same thing here, as it was held, we're using that same area of support. You see, we get to turn around, we move going in the other direction. Even moves going towards that bias pivot are quickly rejected. You see that? So that's what, to me, dictates. People have asked me that before. I don't do pivots in the conventional way that people do. I think you add the top, the bottom, divide by 3, and all this. I don't do all that stuff. I just go and look where I've seen the most touches and where the market has a tendency to react. And once again, like you said, moves to the bias pivot, immediate reversal, moves going in that direction, didn't quite make it, stopped the market in its tracks and headed back the next direction. As we go past 2214, you see an acceleration, and then to confirm that the significance as a bias pivot is that when the market comes back up, which was previously support, you can see reactions to the upside, now becomes reactions to further moves to the downside. Same thing, and once you get back above the bias pivot, it launches the market, come down here, acts as support. So this is what we were talking about, is that once you get past the bias pivot, you see action or price accelerate to the downside, and then we quickly get some short covering because the market was well overdone, but then the move back towards the bias pivot is quickly negated or actually repudiated, and then boom, we just follow up to the downside. And you can see it's really very technical, but we had seen some huge moves in this dollar yen. I had not been paying attention to it, even though I do follow, like I said, I don't follow any of the cross rates at all, but I do keep an eye on, other than the euro, I keep an eye on dollar yen and dollar CAD. Just haven't been paying that much close attention to dollar yen, unfortunately. So let's go move into the euro. Let me see, had some comments. Andy says, Just want to bring to attention of everyone that we have the Spanish general election over the weekend. Yeah, that's true. I saw where PM Rajoy got punched in the face by some teenager when he was walking through some kind of a political rally. Over the weekend, so I would advise all to manage risk as expected and has not been accounted for at all. I have seen no news about it and no tweets, just for information that could provide a nasty gap. There hasn't been that much worry about the Spanish election. Obviously, you've got the concerns with moves in Catalonia for, seeking independence. So they're trying to go and keep everything together. In Spain, Andy's right. It certainly hasn't come to the forefront, and I just haven't seen that much play on that. And they did approve. They didn't extend, but they did approve a little bit more additional QE. So at least for now, the market's really not that worried about it. The only reason I saw the news was because that teenager punched him right in the head pretty good too. That's the only thing I saw there. If you wanted to watch it, you can watch it on YouTube. But he got whacked pretty good. Dan says he shorted the dollar yen yesterday, 22.70. Jeez Louise. And New Zealand Kiwi yen at 82.30. Don't expect to wake up and see that, but I will take it. Holy moly, what a heck of a short. Okay, well, yeah, I wish I would have been paying attention to the dollar yen. I just really wasn't, even though I've kept an eye on it. But as I said, I've been focusing so much on the euro and crude, and then just recently started to take on, the boon. So let's go on and move into, as I said, to the euro. So, if you remember from the other week, we had what we called our value zone, and here it is in the orange. I still have that marked off, and so you can see this is where the market found support, and we'll go on and open this up. So we did have this sell-off. Be honest with you, as quiet as it's gotten, I thought we'd probably be able to even accelerate a little bit more. But for whatever reason, it's just been the market just got exceptionally quiet here. And let me take a look. Okay. Looks like the boom's just gone dead. Okay, well anyway, so we came down here after this, after the, FOMC, we saw this reactionary high up to, I think it was 10, 12. I actually got long here in the Asian session as we dipped into, I pretty much close to calling it at the bottom, and still I didn't even make that much money. I was lucky to get the hell out of Dodge with 20 pips. It went obviously higher, but I was like, I thought we would have seen a better reaction, once we got into I bought it. I don't remember, I think it was like, I know it's just below this level, and I was really just surprised to not see it rally up very much more. But anyway, and as we worked lower, we came into, and I tweeted this value zone of 819 to 795. And if you remember, that's what we were looking for. This was in here on the pullback after the ECB decision. And then remember, I really wanted to get long pretty good, with good, decent size on a move, which I thought potentially there was a move here at 772. Now, I really thought that was going to be a great area to buy the euro. We just didn't get there. We just made it down to the 795. And so that had been my value zone, and I kept that value zone in place. And you can see this is right where the market found support. It ran out of gas. Starting to quiet down as we got into the teens, and I think we made it all the way down to what I think was 803, and then obviously we saw a bottom, and you can see, and it wasn't like a sharp bottom either, but you can see it came right to my zone here, the top of my zone channel, which is 869. I might have taken it out by 1 or 2 pips, but that's what ran out of gas, and now we're back testing middle of the value zone, which is 795 to 819. I just think that the market's just exceptionally quiet. I mean, if you're bullish, because some people are saying, wow, they really thought the euro was going to take off, and it really hasn't. I mean, it's just been exceptionally really quiet, and all it was doing just working off some of the shorts here. I just think that the market just appears to be under a lot of pressure, even though it's quiet pressure. And at this point, I'm just playing it very lightly. At this point, I'm basically in a sense just observing it and just picking levels where to go in and do a little bit of business at. But it just looks like the handwriting's on the wall for the euro just to maybe not sink lower, but just to continue to work a little bit lower. Now, I think you have to be really careful going into year end because I think there was a couple of scenarios I was looking for after the FOMC, and this scenario did come into fruition, which I shared on the in the chat room. I just thought it was going to happen as a higher price, but I said we're going to come up here, we're going to stop out some people, and then the market's going to sit there and it's going to stall, and then it's going to say, wow, you know what? They're going to keep raising rates. What the hell are we doing up here? And then the market's just going to start sliding. And then, as I told you all yesterday, I said in the chat room, then I expected the market to continue that move into Asia, which we did ultimately. It's just that we only rallied up to 1012. And I really was hoping for a move at least up towards 1087. And then that would stop a lot of people, and then the market would just sit there and stall and just basically think, well, you know what? They're still going to be raising. What the hell are we doing up here? And then the market would just start weakening, and then it would accelerate a little bit, and then it would continue to move in Asia, that's exactly what happened. But it actually started weakening in the early part of her press conference, Yellen's press conference, and it just started dripping lower. There just wasn't any bids and just kept working lower. And then, as I tweeted out, we had a nice engulfing candle on the 30-minute, which you can see now it really came undone. But at the time, it was just barely engulfing it here, and that was like around 9:35 or 9:30, and it was engulfing the prior body. And but like I said, as we move lower, you would have thought, okay, they're really going to accelerate. Maybe they're really going to push it lower because I said eventually the target will be back to the 756. But we just haven't really seen that much action, and we haven't seen any wild short covering either. So it's just that the market just seems to be hanging heavy, and preferably I'd rather be a seller of the bottom than trying to buy the thing, because I just think that ultimately you'll get your money back as you short it. I'm not as convinced as when we were in that Friday after we got up as high as, what was it, 1072, about four Fridays or 5 Fridays ago. Maybe it's a little bit longer than that. I'm not as convinced when I told everybody no matter where you sell it, you will get your money back. Well, and obviously that paid out, but I'm not as confident there. I'm saying, but I would sleep a lot more soundly if I sold the bottom here than trying to buy anywhere and up in here. I just think you just have to be very, very, very careful, and all you're just seeing is a little bit of short covering. That's about the best you can go and hope for in the market. And it's just, to be honest with you, it's kind of scary to be a buyer. I mean, I came in that Asian session, I was buying down here, and I thought I was a freaking champ. And we just did, it was just that rally just sputtered out really quickly. So we'll go and take a look here in the 30-minute. This is just a closer view. You can see here that we're on the, on the 30-minute, just a closer view. And we've got the sell signal post the conference on the exponential moving averages, and that kept the market on the downside. You can see that here. And then we came into our value zone, which was 819 to 795. That's marked off on the 2-hour. You can see here that we basically set like a double bottom here, and that allowed us to get a little bit of short covering. And the market sat here in this 837 area. And at this point, you couldn't really say, okay, well, it looks like the market wants to take off. But we gathered ourselves and held, and the market tested on both sides. You can see on this bar here that we took out the prior lows, We didn't finish that strong, but the market was just able just to go on and squeeze some people. You can see these bars. These bars aren't even very constructive in the sense that they're just very small. That just keeps kind of basically just squeezing people until we get into the top of the zone, 869, and then people think, okay, that's a great value. I'll take the short, and then we go on and turn around and we just start moving lower. I kind of think that as we go into the weekend, we're probably going to take out these lows here and probably maybe get past the 795. And that I think that that's the risk. So you have to go in and be careful. As Andy said, you got the risk of the Spanish election. So, but I think obviously the risk is to the downside in the euro. Sydney says, Paulie, do you study the dome to see where the buy and sell orders are to help with support and resistance analysis so you know where to enter and exit markets? Thanks. We're going to get into that. I'm new. Yeah, I've used a dome before, but I'm new to the dome. Let's see here. You know, I've read some stuff. Not read some stuff. I've watched some stuff, and they say it takes close to. Some people get faster than others, but it takes some time to learn how to use. I mean, to become comfortable. I've seen some people say it takes up to about 4 months to really learn, and I mean, I don't, as you know, all my analysis just goes with the levels, and I come up with the levels based on what I see the most touches, and that's worked fantastic for me, okay? And then I use my exponential moving average, which I don't use it enough, I'm so stupid, but it points me in the right direction of the trend of a trade. Okay, you can see here with the boon here, this on the 5-minute, you get this buy signal here. Notice how it rides it, and all it does is it kisses it here and still reinforces that up move. Same thing here, but I've tried to go. I mean, you know, some people, that's all they look at. They just look at they just have their domes up, and that's all they're looking at, and looking at the volume here. What I've tried to do is, instead of just solely focusing on that, I've used this volume at price, which I use off of my off the X Trader, and so I pop up this chart just so I can see where there are certain key levels that the market is respecting. I saw that with the euro on the 6E. I think it was 930. I think it was 930, which I thought was a very key level. I think that was during the FOMC. And so it's telling you if we get past that level, it's really going to go and accelerate, you know, lower. So that's the way that I use it, but I'm still not that comfortable with it. And I've considered looking at things like, you know, market delta or you know, trying to go and understand it. I'll have to see. Like I said, that's one of the things that's kind of held me back, you know, because you know, obviously I missed the boat on Dollar Yen, and I don't. If someone to tell me you missed the vote on Kiwi, I couldn't care. But I mean, you know, Dollar Yen, I do follow that closely. Obviously, not close enough because I've been focusing so much attention on these on just incorporating some other markets, or trying to narrow the markets that I look at, and just basically get down to just hardcore scalping. And we've seen the crude oil continue to work lower. Finally, we're breaking a little bit lower. But that's why I use that more closely. I'm new. Not even relatively new, but brand spanking new to trading the boon. But I've used this closely in trading the euro, as well as the crude oil, and that's where it's gone and helped me. And we'll take a look at crude oil because I'll just use plain old volume, and that kind of keeps me, kind of helps me. But like I said, by using the ladders, yeah, I can see on a very short-term basis. When I'm coming into a key level, I use it more simplistically. If I'm coming into, like, let's say this 5901, then I'm looking at how much volume has been traded at that level, and I just try and see, are we seeing a big increase? And I was doing this yesterday when we made this run up here, and I talked about that. This run up here to 58, 50, but I was hoping for 58, 52, and I wanted to go and get short the market. And that would have been a good move. It's just that it ran out of gas right at 58.50, 58.48 really. And I was looking at the volume at that point to see, and I was hoping that we'd see a little bit of a good spike in here, 58, 52, and then I wanted to go and get short. So I've tried to go and incorporate that, but like I said, I'm relatively new to that. There's another one that you can use, which it looks is kind of popular that people will use with Ninja is in some of the programs. Is called Jigsaw, and that one looks pretty cool too. But like I said, I'm somewhat of a neophyte in this area. Although I do like the volume of profile. That has really helped me. I'm not that much of a, like I said, market delta, footprint, all that other stuff. But it's something I'm gonna look at, and I'm still looking at different options there. But for now, I will say I do like the TT because you can move in the market. It's exceptionally fast. I don't know how fast the Jigsaw is. I've seen some people swear by it, but the good thing about the TT is because you link in directly with the exchange, so or the feed or whatever you want to call it. Anyway, so let's go on and move into the crude oil. And Andrew says, hi, Paulie, always appreciate your view on oil. Do you take RSI into consideration on your short-term levels, 30 minutes? No, I don't. And I've used everything under the sun. I've been trading for years and years and years. And I didn't even become profitable until, it wasn't, I've been trading for years and years. It took me a long time to become profitable. And I've used every tool in the toolbox, and I'm just telling, at least for me, some people do use it. I just keep it, I found that for me, it's easier just to keep it simple. Like I've told you before, I just trade the levels, and I'll go on and make these zones, because these zones kind of give me what I told you before, which is simply just perspective. That's it. And they've helped me a lot, too, because if you just look at one white blank chart and you just have lines, it's sometimes it can be a little bit tougher. But when I move into a key area, like here, I knew, okay, we're into that zone now, and I had that 43.56, so if I'm looking for the market to weaken. So that's where these zone channels, they help me. They give me perspective. Now, I didn't pick up these zone channels from anybody. That's my own thing. I see other people color in zones, but I didn't pick it up from anybody. Most of the idea of levels and stuff I picked up from 50 pips, and he would be very good as far as saying the market's going to go here and go there, and I'm like, I don't see really what this guy's seeing, and I would just keep looking at, and then I told you I also picked up a lot from where markets move from one level to another. It took me a long time to understand. I picked that up from Aqua Regia FX. But he just made me learn. He wouldn't really tell me what was up. He would just say it's going to go here. And I had to figure out, well, what the hell is he seeing? I don't see it. So it took me months and months just to keep looking and sticking my face in a chart and trying to see if I could see patterns. And so that's how I came up with the levels. I saw the different touches. I started figuring out myself, okay, this is how I would go with it. And then I would increase the levels here, make them thicker, because I thought that was a key level. And then things like the bias pivot, that's all my stuff, where I just said, okay, I think this is where the market comes to, and then it turns around. And then I used Fibonacci, which I picked up from Blake, and that was really my big turning point, was using Fibonacci. So I don't use oscillators whatsoever. I've used them. I've used stochastics. I've used slow stochastics, used RSI, different measures of RSI, 3 and a 5, and everything under the sun. So I just don't. But like I said, so when we're looking here at the crude oil, and we were talking about the dome, and I was also talking about the volume and profile. But on this chart, this was just different. This is just the volume, and this does help me. And we'll go into that real quickly. I mean, usually on Fridays, we kind of focus a little bit more on the tutorial part of it. If you want to think about that, like trying to learn it as a public, because usually it's by the end of the week. And so I usually try and tighten down the hatches or batten down the hatches at the end of the week. Although I generally don't like to trade on Fridays, I think it was about 3 or 4 Fridays ago, I really tore it up and did the most volume that I've done in a long time on any day. So it varies, but I generally don't like to trade Fridays. But we talked about this volume, and this is just a plain old volume that anyone could get on here. And when you look at it, you think, wow, we're seeing some big volume. But I told you that I noticed for yesterday that the market has been relatively quiet. And you can see that right here. So if you back this up, and pull this up in a 10-minute, you can see we've had these huge volume spikes. Here's a huge one. That's what it looked like we were probably close to the bottom when I saw this big old spike. But as we moved down in here, I shared this with y'all yesterday, you can see that the median volume is probably like around here overall. Where you've seen like pretty good liquidity, pretty decent size, okay, coming in here. And look how dead the market's been. Look at that. I mean, just nothing. And still nothing. Now we're getting a little bit of activity here. So now this just gives me a general idea of activity in the market. Sometimes if I see a spike in here, and then I think that the market is coming to a certain area, this is where this will help. But I use it differently than when I'm looking at volume at profile. But I'll just use an example, but this isn't a very good example because the market's exceptionally quiet. See, the market's been trading too quiet for me at this point. Let's see, and then February's just been dead as can be. But I will look for certain key areas, and you see, that's what I'm saying. February is a horrible month because it's already been this contract, nothing's been happening. But if I have a price that I'm coming in, coming in that I think that there's going to be a key area, and I saw that the other day in crude oil, but it was when we were still trading the January contract. And it was coming to an area that I really liked, and I had a key level. I'm just going to use this as an example. Let's say it was 37.60. And so I'm seeing right across some pretty good volume. This is the heaviest volume here, this bar, and here. And I'm not, like I said, I'm new to volume profile and all that other junk. So I'm no expert. All I've done is I just try to adjust the colors so that I can see something to tie into the level. So when I saw, like, as an example here, if I like 37.60, and then I saw, okay, wow, it's coming into my key levels. I see a fib there, and I'm seeing this is a pretty good marker for some volume. Then I feel pretty good about taking the other side. And then I will look at the dome to go in and see, okay, am I seeing some pretty good clips of volume and stuff like that as it's traded at that level. But that's the way that I would use it. This one is not a good example because, as I told you, getting back to this chart, it's been dead as a frickin' doornail. You're looking here and you're thinking, I don't think it's dead, but then you back it up for perspective and you're like, whoa, this market's been trading dead. You see what I'm saying? I mean, I'm not going to compare it to these huge spikes because gold's always been very volatile. But you can see here that this market, when you get rid of these upper spikes, even here, there's some pretty decent volume in here, and still the market didn't even come close. But this is where you're seeing the bulk of the volume during the day, pretty good volume. But when you look here, this market, for the most part, hasn't done anything. That's why I was saying I think you missed most of the party and why I've stayed relatively quiet in trading the crude oil. Now we're working a little bit lower. Anything can happen. They're probably going to press them a little bit lower going into a Friday because that's the way the market has been setting itself up for. We're here on the 30-minute. But once again, this market, and we're starting to turn a little bit. But as we roll into February, the market has been relatively quiet. I'm just going to sit back. That's it. But it's time to go and take a break, and we'll be back in just a few minutes. And thanks for joining us here on the European Crossover. We'll take a look at the gold market. Obviously, we saw a fall. I'll go and discuss about what I was addressing yesterday, and I was trying to make a point yesterday as opposed to maybe, let's say, trying to give someone a hard time. But hopefully that helps some of y'all from going long gold. Okay, and so thanks again once again for joining us on the European crossover. We'll take a quick break and we'll be back in just a few minutes. Thanks a lot. Okay, everybody, and welcome back to the European crossover webinar. And right now we're looking at the crude oil on the 30-minute chart. As I said, crude's been relatively quiet over the last couple of days. Volume compared to what we've seen has been just, almost non-existent. When you look at this, we're going to look at it on a 10-minute chart. Obviously, we've had some huge spikes, which has coincided with obviously a big move and then a bottom. Obviously, you can see here you get this big, huge spike here. Then one more last spike basically catches the bottom. And here the same thing here. But the key thing, which key takeaway that we wanted to look at was here's been the bulk of good volume and good liquidity, right, coming across here. And you can see that the last couple of days it's just been absolutely dead. We're seeing a little bit of a spike here, but it's been super quiet. Obviously, coming into a Friday, the market's going to be a little bit concerned. Let's move back into a 5-minute, which is what I look at. And we're seeing a little bit of pickup. I was looking on the volume profile. That was pretty decent. This is a key value area. One moment. This area is a key value area. So the way I do it, I think someone was asking me. I think it was Sydney. How I use that, I'll look at. I'm looking at it on just the plain charts and levels, and it's pretty decent area. And then when I look at it on the volume and profile, then I see some good trading coming in there, and an area of what I consider value. Then that kind of gives me that, I wouldn't say a heads up, but it kind of gives me an indication that the market is going to be well supported. So then I'm looking to go on in and either buy or definitely cover. As I said before, I don't put on any trades in crude ever when I'm doing the webinar. I wouldn't mind being in the euro if it came to a good price, but with euro, crude moves so fast that there's no way I can keep my attention to both at the same time. At least that's just the way that I trade. But once again, like I said, we've had some relatively quiet activity, and you can see this right here as we've, since yesterday. We're seeing a little bit of volume pickup right now, but it hasn't been a whole lot. And you can see here on the charts that the market on the 2-hour has stayed relatively quiet in here. We saw this little pop up, but coming into a Friday, the market's going to be a little bit concerned. They're probably going to press them a little bit. But once again, I'm not trying to play that into the week game. For the most part, I'm just laying low here on the crude. Now, I did want to get into, as I mentioned right before the break, about the move in gold, and this is why yesterday I thought that I made such a big deal about it, because I think that was just it. And let's see if I can look at this on a... Okay, here's gold on a 2-hour chart. And this market has not done anything in a long time. And we talked about this yesterday. And, the whole idea is you have to kind of like live in the moment. And what I'm saying that is, take into consideration what gold is doing. I think that Christos was actually, in his defense, was looking at a longer-term move, but my whole thinking was you have to live in the moment, and where's gold? And just because gold had not sold off on the FOMC, because you have to look at things in a broader perspective. There's two ways to look at it. You can't look at things in black and white. You have to kind of look a little bit of a gray. And one of the things that helps me is I'm somewhat of a doubting Thomas. So what people were looking at is they were thinking, okay, well, the gold held up after the Fed rose, so automatically that's good. Well, you could have said the same thing about the euro. And that was my perspective, was with the euro, was they were going to rally although I'd hoped that we'd rally even higher. But my thinking was, and I shared that in the chat room, is that we'll go up, we'll take some stops, and then the market will sit stall and say, well, wait a minute, they're still going to be raising rates, and the ECB is going to be really pushing the easy meter. What the hell are we doing up here? And then the euro is going to start to slide. And then my point was that you would see a continuation or an acceleration of that move into Asia, which is what we saw. I just was hoping that we could get up to 1070, 1080. We only made up to 1012. Well, people were taking this move up here and saying, well, it could have sold off, and it didn't. So that means we're really taking off. You have to look at it at both sides. And once again, my whole thing was, unless we got a close above 87, you would need a close above 87 just to negate the downside pressure. And you would need a close, I said, of 1115 to actually turn this thing around where you can say, oh wow, it looks like we can definitely start to move higher. So that was my whole thinking. Until the market proves itself, you have to be like that. You have to be like, prove yourself to me. Prove that you're not going to go down. And that's my whole point was yesterday. We needed a close above 87 just to negate the downside. So you can see that the market, all it did was turn around and resume back to the downside again. Now, we tested this 1045, and I talked about this because this 1045, I don't remember where I moved it. Maybe it was from here to here, but it was 127% extension. And I remember the 1037 would be the 161%. If the market could have moved down to 1037, I think it would have been a good buy. If it would have gone there on the release of the FOMC statement. That being said, just because it didn't sell off, because a lot of people expect that, doesn't mean that we were going to turn around and take off. And that's what I'm saying. You had to keep yourself from getting susceptible to that thinking, and that was my whole thinking. It's got to get above 87 just to negate the downside. And you could see then it turned around and quickly fell on top of itself. Because what happened was a lot of people bought into that argument, and now the market said, okay, you bought into that. And you know what? The market's not doing much. You know what? We're going to take this sucker on the offer, and we're going to see how well you believe in that move. And so once we got past here, people started getting stopped out. And here, and here, and like I said, they clipped all those people that got long or had that bullish perspective on FOMC. And you can see we took out all those lows there. So you're thinking, what the hell? This doesn't even make any sense. They raised rates, but we reacted well. The market went up. Then how the heck are we going lower and taking out Wednesday's lows? Because the market basically played you. Essentially, that's it. I just don't see anything happening right now in gold. And I liked gold. You remember, I thought we were going to go on and see a move, which we did get a move higher. And I said, hey, I'm looking for a move higher because I thought we'd see some demand into December. And the market dipped and think, okay, now it's going to, and originally from here we talked about, we did get on an up move. This was in mid-November, remember? And someone had asked me, I said, I don't like to forecast. I go, what do you think it's going to move? I go, I just want to trade the levels. I go, but if it's going to hold here, then that would be 1108. That's what I thought the market eventually could go to. And the market fell apart. It rallied back up here to the bias pivot of 73.40 and fell apart again. And I was like, you know what? This market is stupid. You can't even trust it. And ultimately, that was the bottom there. And then the market shot up. And then guess what? I got a lot of people bullish, and we turned around and gave it all back. And so as long as the market keeps doing this, see, the market's going to keep doing something until it doesn't work anymore. You know what I mean? So that's just there's a saying there. I'm trying to think of what it is to stick with that thing until it don't work no more. I forgot how it goes, but something like that. Until it don't work no more. I'm going to stick with that until it don't work no more. And that's the way the market trades. It'll keep doing the same thing until it doesn't work anymore. So every time they rally them, they sell them off. Every time they rally them, they sell them off. Every time they rally them, they sell them off. Every time they rally them, because you're seeing this pattern, excuse me, repeat itself. I mean, I'm not doing it from an obvious standpoint. You can see here, it rallies and it sells off. Now watch, we get a nice rally, we fake a lot of people out, and it turns around and sells off. Then the market rallies, it catches a lot of people, and it turns around and sells off. It rallies back, and it turns around and sells off. Then people got screwed again. On the FOMC, it rallied, and then it turned around and screwed the same people over again. That's what I'm saying. Until it doesn't work, they're just going to keep on playing that game. It sounds stupid, and it's like, no way, it can't work like that. It can't be that simple. That's just the way these guys and gals trade. Until it doesn't work anymore, they're going to keep doing the same thing. That's why I was trying to emphasize yesterday, you have to get a close above 86 just to negate the downside. Because then you would show these people, guess what? What you've been doing, which is sell a rally, it falls down. 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 Sell a rally. If you get a close above 87, then that was my thinking. Guess what? It doesn't work anymore. And people say, you know what? I'm not going to play that game anymore. And that's the same. That would negate the downside. And then maybe you could start to work higher. It doesn't mean that people won't come back in and sell it against 11.15. And there's our 11.15. But I said, if you got past 11.15, now you can start talking about, hey, you know what? We could set ourselves up for a big move back up to 11.50, 11.70. But you have to do it first before they're going to give you the credit. And people were just trying to put too much on the idea of it didn't do this post-FOMC. But that's all we got here on the gold market. Let's see how much more time we have left. And we move this out of the way. Now, the SPOOs, they petered out. Everything looked hunky-dory, and we're clipping along, and I said, you know what, we have a nice target to come up to this 79, which is 77.50. We had the 79, and I'll be doggone if we didn't run out of gas. Sometimes that can happen after a big event. They'll go in one direction, and the next day they turn around and give it all back. But, sheesh, they really did go on and sell off on this, and we did get the sell signal here on the exponential moving average, right in here, so it wasn't like it caught it right there, but that the momentum would stay down. And that was like right in here when the market said, okay, now it's a sell on many rallies. We didn't even rally that much, but the momentum clearly stayed lower. And it's basically now they caught the market on the wrong side once the Fed came out with their decision, so we got a lot of people spooked and got faked, and now there's no one left to buy up here, which it looked like. I thought we would make it up to at least the 78%. But now the market chooses then to press. So anybody that was short in here thinking, well, the Fed's raised, now it should be bearish. Now all the people looking and saying, what the hell happened? Now the market went back down. I'm surprised it sold off to this extent. That was a pretty good hell of a sell-off. And that's what I'm saying. You're seeing a lot of crazy currents, and that's why today I just really want to go in and play light. I'm not looking to go in and press on either side. The euro has been relatively quiet, so between the euro being quiet and the crude oil being dead as a frickin' doornail over the last couple of days, and you can see that clearly here. Not to emphasize that again, but you can see what you've been looking at. Look at the markers that you're seeing. Very nice volume. I'm not even talking about the spikes. I'm just talking the bulk of the volume right in there. And now when you see that right in here, coming across, all good volume, and then you come to yesterday and today. Just a dearth of activity. I'm not going to put myself in that kind of situation. I want to trade when there's volume. So that's what I'm saying is, at least for me, I just don't see the advantage right now. And I'm just not going to open myself up. And we're coming into year end. You got to be really careful about, like I told you before, about some of these moves that we may see. I'd rather just come in fresh. I think other people like Andy have done exceptionally well. And, you know, he closed out of his shorts in the euro. So there's no reason to put yourself at risk now on the rally back. If you made done well, yeah, the money to come back, and we'll go back into the euro before Blake comes in. then you can turn around and say, you know what, I'll add them up around 869, which is a great technical area. And we'll move into the euro quickly. George says quadruple expiration date. Yeah, there's a lot of games going. I'm not even going to be in that situation. I do wish I would have been in the dollar yen because I wouldn't pay attention to that. But it is what it is because I've been looking at other markets. But those things happen. So, as I said, like Andy, we talked, him and I were talking yesterday about, the market moving into the value zone, and he had covered. Now, on the way back up, this was a decent area from a value point of view to engage your shorts again, okay? And so if you keep on playing that game, say I'll take a little bit at 869, and if it works higher, then I'll add a little bit more. I'm not worried about it, whatever. Then you're able to go on and take advantage of the gains you've made and cover down here. But like I said, right now the market's relatively quiet. Although I think the risk is withers today or come into Monday that the market just wants to continue to go and press it lower. And I think you have to be careful as we come into year end that you just might see some more dollar position as people just decide, you know what, it's just safer to be a buyer of dollars, and then you have some trouble with this market. So I just think you have to be very careful. Blake's about ready to come on, so let's get ready for that.